So here we go. It's another episode of Love, Death, and Taxes. Hello, Agnes. How are you?
Hello, Ryan. Let's get to the most important subjects.
Yes, that's right. That's right. Now we're going to be talking about taxes today. So I thought one of the best things to ask you about, and this could go into your frequently asked questions drawer, right? Is what are maybe the top five, three, five, 10 things that you could do? Let's stick with five, right? Top five things that you could do. Top five tax tips for you when you are starting a business. So let's begin with the end in mind, right? And not go out here and just willy-nilly start a business and then find ourselves in tax trouble. How many people do you have in your business who you have to help, Agnes, who it's mainly about their business problems as far as tax resolutions are concerned?
I would say it's 50-50 between personal and business. But then when you have problems with business and you are the party responsible for your business, they can let go of your business, but then they go after you. So that business problem becomes your personal problem.
Yes, that would be a problem, and much larger. Yeah. So so let's start there. Top five tax tips when starting a new business. Why don't you give me one tax tip that would help it so that my personal money doesn't get taken from my business money?
The most important issue is what kind of entity are you going to form?
Okay, entity. Okay.
Yes. That will determine what kind of forms you have to file. If it's going to be 1120, it's going to be 1040, but depending what entity you have. If you have incorporated, if this is the right thing for your business, with incorporation, you need 4 members on board, you need directors, you need vice president, president, and then you have more people to spread responsibilities when it comes to paying taxes as well. But then you're paying double taxes if you are the owner, meaning you're paying your business tax, and then whatever you're getting, you paying taxes on your personal income tax. On the LLC, you can file taxes with your personal taxes with 1040. Protects your business. LLC protects anything that belongs to the business. But you file taxes together with your personal taxes. So first, you have to establish that. What are you doing? What is the right thing for your business? Is it incorporation? Is it S corp? Is it C corp? Is it LLC? Is it LLP? Establish that first. This way you go in.
All right. So once you figured out what type of entity you are making as a business, then you're able to say, okay, if I'm this type of entity, then these are the type of forms that I should be filling out. So what would make me decide to say, no, I'm not filing that kind of thing? What kind of problems do you generally have when we're talking about this kind of issue?
Well, we're dealing with late filings, non-filings, having wrong things reported. Are you, as an owner, are you receiving, are you taking withdrawal from your business? Are you receiving a paycheck from your business? And that's depending of entity. That's influence how you're dealing with your personal taxes later and how you're dealing with filings at the end of the year when it comes to business. That's very important. So not filing the right forms, missing deadlines, it's a problematic.
Yeah. Sounds like the worst problem that you could possibly have. So, number one thing, figure out what kind of entity. Give me a second thing. What's next?
Second thing will be determined, and that's kind of connected to number one, our sales taxes. Are you going to be in need of filing sales taxes? Are you providing services? Are you selling things that you need to file sales tax? That's very, very important. State is not so forgiving when it comes to their share.
Right.
So it's very important that you determine that, and then you file your tax, sales tax, if it's needed in
Right.
timely manner. And even if one quarter is slow, you don't have anything, file with 0 on it, but still file the form. If you don't do that, the state will file for you with estimated number based on prior quarters. You don't really want to do that
No, you
because
don't want that.
that number, if you slow in one quarter and you don't have anything, or for some reason your business is on pause, or you close it and you forgot to determine, that maybe somebody, myself or accountant, you have to address that. Make sure that those forms are being filed and that there is no question mark if the business is open or not. Everything has to be filed. Final forms, final tax, sales tax, final tax returns. That is very imperative that is being done. Otherwise, you will receive estimated taxes.
Yeah, that's not what you want at all. So you're determining, one, what kind of entity type you have. You're determining, two, whether or not you're going to do sales tax filings. Quick question with that: when you charge people, say you're an independent, I don't know, maybe an independent marketing consultant or something, and say you're charging people and you're not charging them sales tax, what are you in trouble with that, or does it make more sense to not have charged the sales tax? Because if you're charging it, then you definitely have to pay it, right?
Not every business needs to pay sales tax. So
Right.
go to. I'm not going to tell you myself right now what kind of business does or not. Go on the website, on New York
Okay.
State website.
New York State sales tax.
Yes, check exactly what
Right.
if your business is in need of filing sales taxes.
Great. So okay, so that's number two. How about a third top tip that you should probably be following when you are filing your taxes for a new business?
It's very important to determine if you're having employees
Mhm.
or you only have contractors, independent contractors.
Okay.
With some contractors, there are laws where you have to pay, you have to charge them certain tax, payroll tax that we have to withhold, not charge them, withhold. So again, make sure that those services that you have from your contractors, that you are not obligated to withhold payroll taxes. Or federal tax, I should say. And determination if you need employees, it's very important, because if you have someone on payroll, then quarterly you will need to pay payroll taxes. You need to not only withhold payroll tax from your employees, but match their Social Security and Medicare withholdings. That is very important. That's when a lot of business owners find themselves in kind of difficult situations when they don't file 941 forms at the end of each quarter, and they don't pay payroll taxes.
I would assume that if you have a business with employees and not contractors, you should definitely have a an accountant, like on a regular basis. I would think that that is someone who is looking at your business quarterly and handling it as such. If not, you're going to be in a lot of trouble. This is not simple stuff. This can be complicated. Yes.
This is it comes to at times it might be you might be talking about criminal charges as well, uh, because they are not your money. They are others people money. Sales tax, it's a state money. Payroll tax, when you're withholding, that's your employees' money that you're withholding from their paychecks.
Right.
So this is a very serious business. Very
Right.
serious business.
Right.
They're not filing at all, or filing and not paying. There are always resolutions that you can come up to the problem, but how about not getting into those issues at all?
Right.
It's not like I don't want to have clients, but
So tip 3 would be basically figure out whether or not you've got employees versus contractors and pay the appropriate taxes based on that. That's really important to look out for, to figure out. And that way you won't start your new business on the wrong foot with the tax man. All right, so give me another one. Number 4.
Number 4, keep your receipts.
Okay, that's good.
Keep your
receipts. And we're talking about for everything?
Oh, as much as possible.
Okay.
Nowadays, there are businesses, it's paperless, which is great, but you can keep electronic copies, and
right.
It's there's always a trail. There's always a trail. Keep some trail, especially for the petty cash or the office expense. Those 2 accounts are it can be very misleading. So watch what you are charging up to those 2 accounts mainly. Because in case of audits, you're going to have to explain specifically those 2 accounts.
Okay, good. I like that. Keep your receipts. You make sure you get your entity type. And this is really important. Keeping your receipts is really important so that you track everything and you know where your dollars are going. So that if, God forbid, if the taxman comes to you and he's like, hey, it looks like you spent $2,500 on this miscellaneous stuff over here, that you actually can say, well, I'm not even absolutely sure what those are, but here's a bunch of receipts that might actually add up to that, right? I've actually had that happen. Like I did taxes once, and I found more things that I had spent money on in my business than I actually realized that I had. And I was like, my gosh, I'm getting all of this back. And yeah, it was because I had kept receipts, but also a spreadsheet. I keep a giant spreadsheet every time everything comes in. A lot of my business happens to be online. So if I get
I have to tell you something funny. I used to, in my younger days, when I just started getting into this, I was so diligent with all the receipts that I was actually attaching copies of all the receipts to my personal tax return.
They don't want all of that.
After 5 years, I got the notice. Please stick only to the form. Don't send us those receipts. They sent me a notice asking me to stop doing that. Just keep your receipts for yourself. Send us only forms, because my tax return was a couple inches thick at this point. So.
I'm happy now that they will actually look at your statements, or like your PayPal or whatever. There was a time they were like, no, we need to see physical stuff. I said, but it's all right there. You can see that what I spent.
Now it's getting a little bit different, because majority of payments people making electronically, so you can,
so they can see it. All right, so keeping your receipts. All right, we've got number 5. Number 4. Oh, but that was number 4. But now
that was number 4. So we're getting number 5.
Keep your receipts. Right? Yeah, give me number 5. Top 5 tax tips when you're starting a new business. Number 5. 5.
I thought we skipped one. Okay.
When bring one back.
Net operation losses.
Net operational losses.
Yes. When it comes to the income and expense, at the end of the year, when you're running your business, there's a lot of things that they are tax deductible. Be careful with that. So everything's that, as you can see, 1, it's tied to the second point, second to the third to the fourth to the fifth. There are certain percentage, like 50% of your meals is deductible. Now, again, proof of that, it's very important, comes handy. And not the dinners where you're going, hey, this with your friend, and you say, hey, how is business going? Oh, good. That is not, it's not tax deductible dinner.
No. This is for actually entertaining someone who is going to be a client, or If you are out and away, and where you are away is for work, that is your work expense, right?
That's correct.
But if
That,
I'm an employee and I go and take lunch, am I allowed to put that? No, right? You're not allowed to put that as a business
no,
expense. No.
no, 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 no. I'm so sorry.
And I think it's important to note that it's 50%. It's not everything. It's 50%.
Not everything's 50%.
Right.
Um,
And you get paid back for your another operational loss could be travel, right? How much is the charges for travel at this point? Do you know?
I think it's 55 cents per mile.
Okay, okay.
I have to double check that number, but I believe I'm always getting updates, and there will be new updates coming up for this tax year.
Right.
So that will be, so we'll see how, but I believe it's 55 cents per mile. Then you have tolls, then you have gas, then there's a lot of things that you can, especially to travel, that you can deduct without any problems. The money that you're spending for your upkeep of your uniform, or wardrobe, or dry cleaners, some of that can be as well, if you specifically are required, specific
Right.
wardrobe for your job. This is tax deductible as well. For your employees, health insurance, different insurances which you have to have.
Right.
They're very very important. When it comes to business owners that they're running their businesses from home, very tricky becomes an issue of a home office.
Right.
If you have a couch in your home office that someone can stay over and sleep, that office becomes as a recreation room. You cannot deduct the full square footage of that room as a home office.
So you just got to be careful and not let the tax assessor see the the pull-out couch or the airbed in your home office.
Bill. There are my taxes, but please don't come and visit.
That's madness. That's madness.
Simple. See, like in my office, you visit my home, and you saw in my office, I have desk, I have chairs that I can sit down with my client, I can discuss business with them. It's strictly business.
Yes.
You have and to be honest with you, I still do not deduct that room as my home office.
Yeah.
It's
tricky. You're saying it's tricky.
You can come to the point of deducting some percentage of your light bill and everything else.
Right.
Is it worth it, my time?
Yeah. Is it really?
I just let it go, because it's crazy. It becomes crazy. They're very strict. They're very, very strict. So if you have a room that you only conduct your business, nothing else, go ahead, do that. If you have other usage for that particular room, please don't.
Please don't do that. Okay. So, if it's the room with the whips and chains, you do not have that as a business
expense. That's the other wall.
Unless that is your business, right? If that's your business.
The other wall.
That's the other office. I was thinking, what I was thinking about? Speaking of whips and chains, Louboutin. So say I decide I want to wear some really, really expensive suit, an Armani, or I want to buy some really, really nice red bottom shoes for my secretary. And I say that is a requirement. Does the IRS come after me? because I want to look good.
There are certain business gifts, I guess.
No, not a gift. That is her uniform.
Just buy a part of the uniform for the whips and chains. So that on the other wall. Yeah, that's the one.
That's a different department. I'm not talking about that right now. I'm talking specifically about making sure that my secretary is decked out
Uh,
in
the
Louboutin.
expenses on a potential or somebody's mistress, they're not tax deductible.
Oh, that's right. You told me that you actually had
Yeah,
a case about
yeah,
that.
that's not tax deductible. I'm so sorry.
And
Uh,
what the greatest part about that story, which I guess we'll tell at some point because we're close to the end here, is that it was the wife who asked to deduct them, right?
that's correct. Yes,
Yeah,
because the
madness. The
husband
husband was
had a
not talking
mistress,
about
and that's a very profitable business that they had. And she asked if actually the expenses can be deducted as
it.
a business expense. Like, no,
Yeah, no.
we
You
cannot.
sure?
Yeah, that
You
extra
know,
apartment he was paying, no. So,
no, that's not allowed. All right, if you say
no,
so.
no, I'm so sorry, so sorry. So, like, yeah, all the extracurricular
Activities, yes.
weekends away that you might tell someone it's for work and they're not. No, they're not tax deductible. I am
Right.
so sorry. And this extra yeah, the shoes, the whips, the other things, nope.
I'm
But
just saying.
if that's what your business is,
Yeah, that's what I'm
please
saying. If
keep your
that's my
receipts.
business,
Please keep your receipts.
just keep your receipts. Make
Keep your
sure.
receipts. Then I can deduct every single whip and chain that you buy.
Yeah, right.
So let's talk about the name of your business and what entity you're gonna have. So we
Okay.
will
So,
see.
bonus tip. Are we going for a bonus tip? Is that what it is? Make sure you name your business so that you can actually deduct whips and chains, right? Or muzzles.
Whip and Chains LLC.
Yeah. Oh, that's a great name. Whips and Chains LLC. I wonder if that .com is taken.
Yeah, you should
Whipsandchains.com.
you should check. You should check. Yes, you should check.
That would be great. I'll sell that all day. Mr. Williams, how much is this website domain name?
Yeah.
Well, does your secretary have Louboutins? We'll find out. Oh man, it's always good to talk to you. Ladies and gentlemen, this has been the top 5 tax tips when starting a new business with a tax resolution professional and expert, Agnes Amisano from NewYorkTaxResolutions.com. But also, we're doing this love, death, and taxes thing here. But I felt as if you need to know what these 5 things are when you're starting a business. I'm assuming you could probably go on, right? There's probably a bunch
Oh
more other
goodness,
things. Yeah.
there are ways because there's so much more. There's so much more. When you have employees, you have to have work compensation, insurance, which a lot of people keep forgetting about that. And the penalties are just really very, very, very high.
Right.
And
So
they
you
are
can
not
get
so
that.
easy to deal with as of reduction of those bills. They will give you payment plan, but they're not so quick to reduce that. So there's a lot of different things, a lot of insurances, a lot of expenses that we can keep talking on and on. And yeah, you're really starting your own business. It's a brave and exciting venture. But also, you should sit down with your accountant and discuss everything and get everything in order. Make a list to make sure and check it twice and make sure that you have everything in order. It's a lot of work, but can be fun. So, yeah, I'm not here to discourage anyone from opening a business.
No. But they should know, right? And not just their accountant, but speak with everybody in their business who is actually there spending money, who's actually there doing any sort of traveling. You need to keep your receipts so that you can get reimbursed. Nobody gets reimbursed. This is what used to happen at my law firm when I was in accounting. Nobody gets reimbursed for anything unless you bring me the receipt. I need to see the receipts and make sure that everything got taken care of. But yeah, it's very, very important to have these rules and make sure that everybody's taken care of. So I'm going to very quickly go over them. Number 1, she said, make sure that you're sure you know what entity type you have created and you're choosing the right tax documents for that entity type. Number 2, if you are going to be in business, you may or may not need to file for sales tax. If you're not filing for sales tax, figure out why not, and definitely make sure that the amount that you are paying is getting paid. And if you are filing, pay the tax. If you are not filing, please file, right? Number 3, employers versus contractors. Which of them do you have? And then employees, versus contractors. Which of the ones, which do you have? And by figuring that out, you have different tax duties that you need to perform. You have different tax responsibilities that are expected of you. Your employer identification number is so that you pay people properly. Number 4, keep your receipts, which is kind of related to number 5, your net operational losses, but keep your receipts so that I don't have to get in trouble for your Louboutins, your whips and chains. Number 5, be aware of net operational losses. You are doing all these things in your business. They cost money. It does cost money to run a business, ladies and gentlemen. And whether or not it is an investment like marketing, or it is something like, your Louboutins, you have to check it, make sure that you are following those numbers so that you know whether or not you are in the black or not. I mean, at the end of the year, you should be able to say, I have been able to pay my employees and myself, and the net operational losses are X amount, and therefore, I'm not in trouble. And I'm not like going over that, spending more than 50% on whatever, what was it, meals? 50%
yes.
meals. I'm going to spend $2,000 on this meal. $1,000 of that is yours. You're going to have to pay that out of your pocket, bro, because the truth is they only reimburse you for 50%. So those are the top 5. And thank you so much, Agnes, for spending time explaining. I did it right? That made sense.
You got it. Thank you for summing up. Yes.
Just a quick summary. I love that. Okay. All right. So that's it for Love, Death, and Taxes for this particular episode. I hope to see you guys soon. Again, thank you. You're over here instead of over there. Thank you, Agnes Amisano, New York Tax Resolutions. I'm Ryan O'Neill Williams. And I'll see you guys very soon.